Hello, traders, and welcome to the market opening preview, August 30th, 2016, on a Tuesday. What a absolutely gorgeous day in Thailand. Yes, I'm coming to you from Thailand. Bright sunny skies, blue waters, and nice and chilly this morning, which we welcome a lot. Now, it won't stay that way long. By noon, it'll be cooking out here. Traders, this is brought to you through FXCL. FXCL Excellence in Trading. And please come visit our website at fxclearing.com for your trading solutions. Traders, great to be with you. We have a lot to talk about today, but I've got to tell you, there is no action in the markets. The volatility is just not there. We've got about 9 days left. Probably by a week from tomorrow, being Wednesday, we should start to see big money coming back in. Labor Day will be over in the U.S., and normally after Labor Day, the markets come back and we can start trading normally. Traders, if you're having a hard time, don't feel bad. Really, this is just a really, it's probably one of the slowest summers I've traded in 10 years. It is really difficult to stay in trades and be successful. It's not easy. It's very difficult. The entry's got to be spot on, and you have to get to break even really quick. So you probably get more break even trades than you get profitable trades, right? But break even is okay because that's a winning trade. You don't lose any capital. All right, let me talk about myself here just for a second. My name is William Gilday, and I'm your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I will tell you that I do record this during the Asia session, and I recorded it in Asia. I do it before the London session. I recorded it in Asia. So if you're looking at this at London, just go back about 10 to 12 candles, and you should see where I started my presentation. So I'm a pullback trader. I love currency pairs to make a move. I usually use my Fibonacci tool, and I wait for the pullback, and I enter into my trade. And that's about 80% of the way I trade, and it just works. The problem is a lot of pairs sometimes doesn't give you that pullback, so you gotta take your entry, whether you're using exponential moving averages, whether you're using price levels, and things like that to get into the trade. I like price levels. Price levels are great. If you mark price levels up on I got another platform, and that's all that has on there is price levels. So I'm going to trade a pair. I slip over to that other platform. I see where my price levels are at. I update them every day. And if I'm coming to a significant price level and I want to buy a specific currency, I might hold off and wait for a pullback and then take it, and hopefully we can get through that level. But I do use fundamentals a lot. I trade fundamentals a lot. Fundamentals are so important in trading today. You need to know what's going on around the globe. You need to know what data is coming out, and you just have to really be on top of your fundamentals. I don't understand all the fundamentals. I've been trading for 10 years, and I don't understand all the fundamentals. But at least I know when they're coming. I know when that freight train's coming down the track, right? And we don't want to be standing in front of that. And, it has a positive side, which gives you the opportunity to trade that fundamental data. I usually wait about 45 minutes, and then if it's in the trend and it has a continuation, I'll jump in. Or it tells you not to do anything and just stay out, right? Such as NFP, which comes out on Friday. I'm not going to be in that trade, I promise you that. All right, that's enough about me. Let's get over to the risk disclaimer, the legal stuff. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex or any other market. Traders, please do not trade money you cannot afford to lose. Traders, remember, this is a game of capital preservation. Live to trade another day. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's talk about some news and commentary. I covered a pretty good amount. A couple of things today. One, there is only one high impact news event today, and that is consumer price something or other here. When I want it, it's never there, right? Like, I really need to know where this is. Where is this at? All right, let's take a look at the economic calendar. So we had household spending out of Japan came above expectations. Retail sales came above expectations. Jobless applications was bad. The Aussie really had no data today. We have a lot of medium impact CPI out of the euro, out of the Swiss. He has an employment level. These are medium impact, and we have Italian 10-year BTB auction, big deal. That's not going to do anything in our markets. German CPI for the month of August, medium impact. So yeah, nothing really going on. Current account out of Canada, and like I said, then in the U.S. session, all we have is CB consumer confidence for August, and that is it, folks. So high impact news is not there, and even the medium impact is not that big of a deal. I was I was doing a lot of thinking before I started this video, and I just want you to know, and I think I said this earlier, but don't don't get discouraged because the markets are not doing what it normally does. We are in the lowest part of the summer holiday. Most people are still on vacation till Labor Day. They come back on Labor Day and they're back to work like that Tuesday and Wednesday. And hopefully by a week from tomorrow, we're back at least to 60% of the big money back in the markets. And, we'll take it from there. And the cold weather hasn't hit, well, if I talk about the Northeast, in New York, the cold weather hasn't hit yet. Cold weather hasn't hit the Eurozone, right? I was watching the Bundesliga over the weekend, and they're in t-shirts, right? So the cold weather hasn't hit that part of Europe yet. I watched La Liga, Spain. They're in t-shirts. The cold weather hasn't hit them yet. So till the cold weather hits and people don't want to be outside no more, we can see this low for a little while. I don't think it's going to last long, but it is what it is, right? All right, let's take a look at what the markets did. The Dow 30 up 0.58%, the S&P 500 up 0.52%, the Nasdaq up 0.26%. Let's head on over to the Eurozone. The DAX negative 0.41%, the FTSE 100 positive 0.31%, the CAC 40 negative 0.40%, and the Euro Stoxx 50 negative 0.33%. A lot of red there. The only one that was in the green was the FTSE. I listened to another trading room during London just because I like noise in the background. And it's they trade the DAX for the first 30 minutes in London. It's quite interesting. I'm not a 1 minute chart person. I don't trade they use the 5 minute chart, but that's really hard. I got to be honest with you. Trading a 5 minute chart's not easy. Okay, the Nikkei 225 is currently trading at its negative 0.31%. The S&P ASX 200 out of Australia is currently trading at 0.50% in the green. The China A50 is not trading, and it closed negative 0.14%. The Hang Seng closed negative 0.38% as they are not trading. However, the Kospi is trading out of Seoul, and they are positive 0.63% at the open. They're only trading about 13 minutes into their trading day. So all looks good on the home front there. I don't want to, beat this up too bad, but I know traders are frustrated. They're losing trades, and, the old saying is, well, you can lose trades and just wipe it off. Well, that's fine if you only lose 1 or 2 trades. But, I get emails all the time from traders, and they're losing trades, a lot. And they're saying, what's going on? Why am I losing these trades? And it all comes back to, folks, there's no volatility in the market. I've got probably the first 3 charts I'm going to show you is yesterday's charts. Price is not moving. There's nobody in the market. And yesterday they had no excuse, right? There's just nobody in the market. Price action is not happening. and the next big one is Friday. So we got another 3 days of, just hold on to your britches and, just wait this out. And I understand because I trade for a living, right? I don't want to be 4 days with no trades and no income. I understand that. And if you're trading for a living, this is not fun. This is not enjoyable. That even if you lose trades, at least you're trading, right? And you're looking at charts that are completely sideways. So let's take a look at the first one. This is the Euro Aussie. I'm sorry, the Euro dollar. And just look at this. This is yesterday's chart. Did absolutely nothing, my friends. Nothing, 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 nothing. We need an aggressive pullback to that 1.1237. The 23.6 is not acceptable. We don't have enough pips there to get us safe now to this substantial support. Okay, so we need this to give us a nice pullback up to 38.2 at 1.1237, and we'll sell it. If it doesn't do it, we're going to sit here and we're not going to trade. That is probably the biggest advice I can give you. As much as you don't like it, if the prices aren't coming to you and the volume is not doing anything, don't trade. Simple. Just don't trade. Go on a demo account. If you got to click a button, go to a demo account and do some practice. Okay. All right, let's take a look at the pound dollar. Here's another one. Came down a little bit yesterday and then came back up, and here we are at the 55 EMA, and what was support is now resistance, but we need this to pull up to the 38.2 also with 13.17, or you can really, I'm sorry, 31.72, or you can wait till 30.95 and then take your trade there. The problem with 30.95 is, no, you know what? Really, 30.95 would be okay. We can deal with that, and take it down. But we're gonna get a jerk at this 200. But if you look at past price, it really didn't endure this 200 EMA, and we're going to get out at 31.17. So again, this is this could be a nice 75 pip trade if it works. There's no data out of the pound today, so that is what it is. So we're just going to sit and watch, right? This is just nothing to do here, folks. We've got to get price action. If there's no price action, there's no trade. Simple as that. All right, let's take a look at the Aussie dollar. And I know I'm like the big dark cloud today. You're not liking what I have to say, and that's okay. But at least I'm going to keep you out of trouble, right? And I'm going to keep me out of trouble. I talk to you, but it helps me more than it helps you probably. It keeps me out of trouble to keep my hand off the clicker because I like to trade. I like to be in a lot of positions during my intraday trading because my theory is if you trade a lot and trade small, you got a better chance of success, right? So if I'm in 6 positions and I lose 2, I still got 4 positions that are winners that'll take over the 2 that I lost. So I like to be in a lot of positions, but I trade small. You'd be very surprised how small I trade, I should say. And I only risk 1% of my account, so I'm not trading big lots. Trust me. In fact, I trade mini lots, but like I said, I'm in 6, 7 positions at a time. Currently, in my options positions, I think I'm over 14 positions. Now, those options go out anywhere from 34 days out to 90 days. I got 2 options at about 105 days. So those, I can adjust and I can fix if I get into a problem. All right, here's the Aussie dollar. Again, no real price action here. This is just sideways, inching its way up. It's close. Let's get a bump to this 200 exponential moving average at 0.7592, and we'll just sell it. I didn't take profit on this because I really don't know. Before I get in the trade, I'll know, but I got to know where this is going to react and how it's going to react to the 200 exponential moving average. All right, let's take a look at the Euro Aussie. This thing made the big waterfall. Now it's like in the middle of nowhere, and basically I'm looking for this to come up to a 1.4789. I did put where resistance was at 48.68. That was just a marker. for yesterday's trading, but this came down a little bit yesterday, and now I want this, to give me a pullback at least to the daily pivot. We've got a 55 200 cross. The current price is on top of the current candle. This might just sink from here. And I have to be honest with you, traders, that's fine. You know what? If you get a good entry here, there's no problem with that. The take profit at 1.4729, if you're in, 5 minis or 5 lots, standard lots, just take off 2 or 3 and let 2 run for you, and put a trailing stop on there and let the market take you out, right, on a pullback. So this pair has a lot of opportunity. I really enjoy trading this pair. This pair is just so invigorating to trade, so exciting. All right, let's take a look at the euro yen. Again, nothing here, folks. It might bounce up to this daily pivot point. I doubt it. You have all 2 EMAs, 55 and the 10, just tangled into each other in the middle of price. We're far ways away from the daily pivot. So I put a support line on there, and we'll look to get in at like 113.88, and that's about the best we can do. Are we going to run into trouble with the 200? It's possible you're going to get a decent bounce there. So if you get in at that price level, you're going to want to put your stop accordingly, because basically you're going to have to give it a pretty good stop, and because we can get some bounces here at the daily pivot. Now, if I'm trading this short and I get 3 higher lows on that daily, on the 200 exponential moving average, folks, I'm not going to wait for it to hit my stop 25 or 30 pips away. I'm going to get out. I'll re-enter it if I have to. If it breaks the 200, which I think it's going to, we can take this all the way down to 113.14 on that horizontal line that I put on the bottom of the chart. So this has a lot of potential, and we'll see how it goes. The euro is becoming weak, and the yen is the yen, and I want to sell this. I've been bearish in this pair for years. I don't want to buy this pair. I just find no reason to buy it. All right, let's take a look at the New Zealand dollar. New Zealand dollar, same as yesterday. It's in the middle of nowhere. It's got the moving averages tangled into price. We need a pullback to 38.2 with 0.7270, and we'll sell it. And we're going to run into a problem here. I got to be honest with you. This 23.6 fib, we're going to run into a problem again. This price level is being reacted to very well, and we're going to run into problems. The only thing we can hope is that there's a little bit of volatility to break us through that daily pivot point, and we'll take it all the way down to 0.7214. Remember, we just want to sell. Our bias is to sell the New Zealand dollar. And the dollar gained strength, actually went back up to 95, which is a great thing. Thank you, Janet Yellen, and the 2 Fed members that spoke after that. I think it was Fisher and Dudley. And yeah, so hopefully, we'll continue with this dollar strength. All right, traders, 3 minutes over today. That makes up for 2 days, Andy. It's 2 minutes early. On behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, I want to thank you for joining me on a Tuesday, August 30th, 2016. Traders, always remember to trade smart and not hard. Please come visit our website at fxclearing.com for your trading solutions. Traders, have a great trading day, and always remember to trade smart and not hard. Traders, we'll catch you in about 24 hours now. Take care now. Bye-bye.